What's going on, everybody? It's your boy Adrian, going to you live on the FX Hangout. And like I said, I'm super excited for what I'm getting ready to talk about today. We're going to be talking about impulse move and corrections, okay? Impulse move and corrections utilizing price action. But before we get started, please make sure you like and subscribe to the channel so that way you do not miss any other new videos that we got coming out. And on top of that, as soon as we hit 1,000 subscribers, I will be giving away at random $150 to one of you that have subscribed. I can look and see who subscribed, and if you leave a comment below, just leave a comment below, then I'll know that you are one of the subscribers. And on top of that, I will be giving away our Focus t-shirt. As you know, when it comes to Forex trading or anything else when it comes to learning a skill set, you have to have that tunnel vision focus, all right? So that way you can master the craft of being a trader. So now we're going to go ahead and get started. So when you're looking for price action, understanding structure, understanding the movement of the market, you want to start on the higher time frames. You want to start on that 4 hour, the day, the week. You want to see what the overall movement is doing, okay? It depends on what time frame you're looking at. If you're looking for entries based off of, you want to see the bigger moves, ladies and gentlemen, you have to start on a day or the 4 hour. If you're just looking for scalping entries where you can catch 20 or 50 pips, you're going to start off with the low ones. But to understand structure and price action the way that you should, so that way you don't have to worry about, oh, am I in the right trade? Am I going in the right direction? You want to look at the higher time frames. So me personally, I like to personally work off of the 4 hour and the day time frame. So if we're looking at the 4 hour and the day time frame on New Zealand CAD as it is today, we see that the current trend is going up. Now, every time when I'm entering into the market, I need to see where is the most volatility. Where is the market moving the most? Now, on the lower time frames, you can't really see it, and let me explain to you why. Because I look at the candlesticks. All right, notice how with me zooming out, okay, notice with me zooming out, I can see clear signs of blue candlesticks and red candlesticks. I see blue candlesticks, strong movement to the upside, right? And we can use a trend line. I highly recommend that you do the same thing so that way you can see this. We see strong trend going up, right? Blue candlesticks. You see a little bit of red candlesticks in there, but mostly the direction is going blue. And then we see strong move to the downside. Right? This is what we call impulse move. If you notice this strong movement to the upside, guess what? It was nothing but blue candlesticks that let you know the buyers, all right, were strongly in the market at that time. You know, they overtook into the market. Now, normally after this impulse move, there's normally a correction that follows that. What I like to see, and based off of structure, what I would love to see based off of structure is I want to see impulse move, all right, and then correction. And what I look for my support and resistance is I look to the left, all right? Now you're saying, Adrian, okay, I see that naturally, but what does this all tie into? Well, ladies and gentlemen, whenever you find the impulse move, pull back, look to the left, ladies and gentlemen, I'm telling you, will always find some type of level of support and resistance. And that level of support and resistance will let you know, will allow you to see if it's another time to enter into the market or should I wait a little bit, okay? So what do I mean by this? If you look at this again, like I said, impulse move, correction, look to the left, what do we have? We have structure to the left. So now we know that, okay, two things that we're waiting for. Either we're gonna wait for a break and continuation to the upside, or I wouldn't say a break, but I would see a continuation to the upside, or we should see a break of this, retest, and then continue to the downside. This happens every single time. Now, you're wondering, why can't I do this on a lower time frame? Adrian, why can't I do that? Because it doesn't always add up to be the same thing. It doesn't always add up. When you're looking at support and resistance, well, me personally, and this is just my personal opinion, somebody else could feel something different. This is just what I found. I find more relevance of structure, meaning support and resistance. When you're talking about structure, a lot of people get confused on this. Think about a physical structure. Think about a house. All right. Support. What is a support beam? What is your support? Your floor, right? Resistance. What is resistance? Your roof. So that's why they have this name for structure, right? Structure is support and resistance going in a direction. So like I said, we see impulse move, we pull back, we look to the left, we see confluent structure. We see that there was a support here, right? On the 4 hour, and now it came into a support here. So now we got confluence, now we got a direction, now we have a possibility that we could say, the market could possibly around this point turn around. It could continue on to the upside, right? And that's what we saw. We saw continuation to the upside. So we track our next impulse move. So look at this. We got impulse move. Once again, if you zoom out, you can kind of see where the next correction would be. Right now, what we would wait for is move to the downside, correction, right? Pullback. And if we get a pullback, most likely it's going to be the previous structure. And if you see, where is our previous structure? Right around here. But Adrian, why is that previous structure? Ladies and gentlemen, because we have multiple areas of hits of support and resistance. Look at this. We got this hit, that one right there, and that one right there. So most likely what we'll be waiting for is the market to eventually get back to this area of structure. All right, let's look at another pair. Same thing with this pair. Let me get rid of all this. We had impulsive move to the downside. Look at this. Impulse move. Correction. I want y'all to notate this. Money is always made at the retest. Most people will try to jump into the trade, you know what I mean, as it's going down. And that's the worst thing that you can do as a trader. You're not supposed to get in it while the trend is already being made. While it's going down, you get into this point, it can always turn around on you. You take that risk. The safest trade and the most profitable trade that you can take is after the pullback, because once you have the pullback, then you'll know if past structure is going to be tested. Again, we have impulsive move, strong move to the downside. We see nothing but red candlesticks. Pullback, look to the left. What do we have on the left from the pullback? We have past structure. And it just so happened that this structure acted as both support and resistance. Have resistance, small little resistance here. And we have small support here. So this level could possibly be a minor and major level in the market. And then what happened? We had resistance and then continuation. This happens, ladies and gentlemen, every single time. If we become patient enough, to wait, even if we look back in the past here, let's keep on looking back in the past. Impulse move, correction, look to the left, what do we see? We see a level of support and resistance, right? We see a level of support and resistance. And every time when you find the structure, like I said, you're waiting for two things, always. Ladies and gentlemen, that's the easiest way to play. Everybody wants to play every single day, but sometimes it's not good. It's not always profitable to play every single day. Sometimes you just gotta wait. All right, wait for the retest, wait for those bigger moves. And when you get those are your most profitable players. Those are the ones that's gonna pay you out 100 pips, 200 pips, right? The moves that you're waiting for. EA, same thing with EA. We were able to catch this one. We have impulsive move to the downside. This right here was a little correction. This little area. We look to the left. As soon as we started getting a pullback, and that's what you have to wait for. Wait for the pullback. Money is made at the pullback. Remember this always. Money is made at the pullback. Even though this little area didn't pull back a great deal, we still had structure. We could look to the left of this, draw a trend line or whatever you want to do, and look to the left of this. Guess what? We have previous structure right at that same point. So no, we didn't get a big pullback, but we still had structure. We had support right here, and then we had all this resistance back here, right? All of this resistance. And at that same point, still resistance. So that's what it's about. This does not have to be a long, it's not a long training, but just simply waiting for these moves, looking for the impulsive move, even on a shorter trend right here, right? We have impulsive move, correction, look to the left. Do we have a level of support and resistance? Absolutely. Have this area here. It could be a minor support and resistance, but it's a support and resistance nonetheless. We say, okay, two things can happen. Either it could come under. If it comes under, then I'm still waiting for the retest to come back to confirm that this is going to continue down, right? Or it doesn't break. It throws wicks. It shows me identification that it's going to continue back up. And what does it do, ladies and gentlemen? It goes up, retesting the high point. Every single time, ladies and gentlemen, every single time. If you want to catch the moves, the bigger moves, you wait for the impulsive move. Get rid of all this again. Impulsive move. Then wait for the pullback. Once you have the pullback, you can look to the left and say, where was previous structure? And then you see your previous structure, and then you can, of course, with more identification, you cannot forget, you can't just have one indication. I don't want to say that, hey, this is the only indication that I use to enter into the market. No, we use what? Those 6-step process, okay? And that 6-step process can turn into a 10 or a 20-step process. There's no, one or two ways to enter into the market. You want to use all your tools available. You want to use your Fibonacci. If you see harmonics, you can use harmonics. But we're not talking about that now. We're just talking about understanding that after an impulsive move, understanding what trend you're in, of course. After your impulsive move, you wait for the correction, safe way. All right. Some people can enter into the market and catch the pullback, but we're not talking about that. We're talking about the safe way, playing with the trend. How can you play with the trend and be profitable? You wait, you see the impulsive move, you notice that, you take note of that. You wait for the correction action, you look to the left, see where they were past support or resistance. And then once you have that clear identification that it's time to get in utilizing your Fibonacci or your wicks, your candlestick patterns and stuff like that, then you can find that area to jump in. And look at this. Impulse move correction, what did it go to? The 618 zone. And then continue to the downside. Ladies and gentlemen, I'm not making this stuff up. As soon as you find the impulsive move correction on a higher time frame, that is a huge confirmation for you to take note on, to say, okay, let me go ahead and start adding my fibs. Let me start adding my fib levels on this thing. Let me start checking out where it could, get exhausted. Where could the market get exhausted? All right. Where can the market get exhausted? I'm not making these things up. Put a fib on it again. What level did it pull back to? 618 once again, right? Drop down. Impulsive move again. You had multiple entries on this thing. Look, we got another one coming. We had to move down to the downside. Guess what? It looks like it's trying to pull back again. Right? We had impulsive move. It could correct, hit here, and continue on to the downside. So like I said, ladies and gentlemen, impulse move, correction, look to the left. It's that simple. And then once you have that, of course, apply the other things that you're learning. Support and resistance. Is there a harmonic? Is there exhausted wicks? Is there, let me check on the lower time frames to see if I see a reversal pattern. All these things also do take a play, but you get your extra confirmation, that strong confirmation on the higher time frames. So that way you put everything else together. So that way you can make more of a solid decision of entry. All right. So this is going to wrap this up. Like I said, I hope this was some good info. Please make sure you check out the other videos that we have available on the channel. And like I said before, please make sure to subscribe to the YouTube channel. I will be giving away $150 and one of our focus t-shirts that we will be releasing here soon. You will be getting it absolutely free. And don't forget to be a part of our community on Facebook. Go to the FX Hangout, look it up, and then don't forget to answer the questions, and I'll make sure I plug you in. All right? You guys have a good one. Take it easy.